Welcome, everybody. Let's see if my audio is working. First of all, before we get started with our digital asset investment show today. Now, I see my bar moving up and down, so I just want to do a quick mic check. And once we do that, I have a jam-packed session today. We're going to be talking about my acquisition plan for 2016. We're going to be talking about how to set up your investment criteria. It is a jam-packed session. So let me just double check real quick if everyone can hear me. And if that is the case, then if you could just put it in the Q&A, just go and drop that in there. And then we're going to be starting basically in about a few seconds. So let's get this party started in very, very soon. Give me a few more minutes. I just want to make sure that everything is working. And once it is, we will get started. Okay, so all right, great. All right. What I'm going to do is I'm just going to start recording this. All right. Well, let's get started in just 1 second. What I will do is I will make sure that you guys can see my screen. Welcome to the Private Equity Digital Asset Investment Show. This is episode 3, and I want to welcome you to today's session. This is the last session of 2015. So I'm really pumped because it's going to be a special session where I'm not only going to share content with you on how to develop your investment criteria based on how I develop my criteria, how I find different investment opportunities, but I'm also going to share with you my plan, my acquisition plan, and the top 3 plays that I'm considering as I move into 2016 with looking at different deals and different opportunities. So let's jump right into it because it's going to be really fun. We're going to, like I said, establish criteria. We're going to figure out what are the good opportunities out there and what are the not so good opportunities to be focusing on. Now, last time in episode 2, in case you missed it, we covered different types of business models that are out there when doing acquisitions. So when I look at acquisitions, there are primarily 7 business models. Some of them I stay away from, some because they're just bad, dying business models. Others because I don't have the experience and I only want to. And you'll see when I start talking about criteria that I only want to really invest into something that I know I can handle. I know I have the experience or I have that strategic partner. So it's very, very important. And that's why I only concentrate on a few of these business models. And one of them that we covered was the passive income AdSense content model, different SaaS software opportunities. And we're going to wrap up this session later on also with a discussion of some of those plays. Now, if you missed it, you can go to digistrats.com/podcast and check out our library of different podcasts that we have. Just a recap of the types of different business models from last time. Number one, there is e-commerce, and that's Amazon e-commerce businesses. That makes up a huge percentage, a huge portion, 53% of all businesses that are sold online. Then you have SaaS, mobile apps. You have service businesses. Those I recommend staying away from because they basically get you another job unless the processes and systems are really in place where you're not the one that's doing the service. The other one is the advertising play, which is a content and AdSense site. These sites make money just by hosting ads because they get a lot of traffic. And then lastly, lead generation. These sites get traffic. They pass on leads, for example, to doctors, to lawyers. So those are the different types of business models. And if you're buying and selling websites, remember, you can always go to digistrats.com/buy to apply to our buyer community where I share proprietary deal flow with my list of buyers. So if you want to see what deals come across my way, potentially deals that I'm either brokering, or just other deals that I might send over your way, then apply for that buyer community. And digistrats.com/sell if you would like to apply for a business valuation and you would like to exit or sell your business because maybe you just need the cash or you're tired of running your business. Let's get right into it. There are 5 criteria that I consider before ever making an investment. And these criteria are essential because this is what really determines whether I'm going to have a successful investment. Because the investment opportunity that I'm looking at, for example, I was looking at this fashion blog, it could be really, really good and really lucrative. And then I was also looking at a directory that was more of a startup play, meaning I would have to invest a lot of time in order to get that up to a level versus the fashion blog, which would have only required one post and so a week and social media on a daily basis. So without having this criteria, I can really get burned and I can acquire something that might be a lucrative opportunity for someone who has the criteria to take it to the next level. But for me, I'm just going to fall on my face first. And it's going to be a complete disaster, time-wise, money-wise, all across the board. So I have to remember these criteria. And for every single person, it's different. These are my criteria, the way I look at investments. And you'll see that I attribute a different weight to each part. So number one is whether the opportunity is a strategic fit or I have a partner that is strategically positioned in order to maximize that opportunity. Number 2, does it provide a level of passive income for me without necessarily being as actively involved, or can I set up the processes to create that passive income? Number 3, what are the investment returns? Is this something that's going to return 100% over the next year, or is it a more stable passive play that's only going to return 30%, but I'm happy with it because I have that stability, I have that security, and it's also passive. Number 4, stability. I got to look at the earnings. I got to look at its history. How stable has it been? And what is it looking like? Is it all over the place? Or can I have some type of certainty? And what is the upside potential? Is this something that is just going to remain at the current level? Or can I 2, 3, 4x that type of income? So let's jump right into the criteria. And I'm going to take you through it step by step. So criteria number one, when I'm looking at these investments is this investment a strategic fit, or do I have a strategic partner? One investment that I was looking at recently, it was a really lucrative investment, I thought, because the seller was motivated, and on the other side, I kind of like the niche. I'm not going to go into what niche it was because it would give it away, and this is I don't want to breach my confidentiality contract, but it was a very interesting niche. And the thing about this investment, though, was that it wasn't a strategic fit. I liked it, and you frequently get sidetracked by these different opportunities, by these different investments, because you're looking through these prospectuses, and just today I probably looked at 5 or 10, and each one, you start having all these ideas. They're written in a way to basically sell you on that business. So you start having these ideas, and you're thinking, oh, this is good. Maybe I don't have that capability in house, but I could do this, I could do that. But that's where I realized for myself that I need to be careful, because I could lose focus. I could get easily distracted, and I need to stick with my criteria. I need to make it pretty firm and pretty standardized. Otherwise, I'm going to lose focus. And so what I decided was, when I submitted an offer for this directory site that I was talking about, it was doing probably around $60,000 a month in profits, between 50 and 60. It's a really good business. The seller, like I said, was willing to negotiate. I unfortunately didn't, or unfortunately or fortunately, fortunately, that the seller rejected my bid. And the reason is that I realized that it wasn't in line with my criteria. It would have required many hours. And so I put in an offer that maybe wasn't a fair offer, but it was a low offer, because that is the type that would be the only reason I would go into it, is because the deal was so good that I just couldn't pass it up. Even though it wasn't a strategic fit, the returns would have been so significant that I couldn't pass it up. But it wasn't a strategic fit. Now, a strategic fit for me, you'll see that it's more around the content AdSense area or the SaaS software businesses. Now, why is that? For example, right now I'm looking at a business, and it is it's in the chat niche. It's a software that's a chat software, and the reason I like it is because I have a couple brands, and we sell products on JVZoo, software products. And the cool thing is, if I find a business like this one that I see, and I know that I can also repurpose that business, turn it into a JVZoo product, and sell it there for automatic income, well, that's a strategic fit, number one. Number two, I already have the developers in place. I already have the teams in place in order to take advantage of that opportunity. And number three, I also have the know-how. So I can value that business much, much easier. I can figure out what steps to take in order to maximize that business. Now, if it's a SaaS business that's, let's say, in the HR space, which I've seen a couple of them, and at first I kind of looked at them, I was considering them a little bit, but then I ruled them out because I don't know anything about the HR niche, and I'm not going to be able to repurpose them. They're not a strategic fit. Same thing, e-commerce businesses, even though they might be lucrative for some people, they're not strategic for me, and that's why I'm not going to take advantage of them. So the question that I always ask myself is, what am I good at? And this sounds like a philosophical, theoretical question, but it really does have an impact on what you decide to do. So figuring out, hey, what am I good at, and how can I monetize that? Because I'm going to see, let's say, when you're getting in the space, the buying and selling business, digital asset space, and you start seeing 10 deals a day, 5 deals a day, you can easily get excited. But if I don't figure out what I'm good at and what I'm going to pursue, then I'll probably get into the wrong deal. And unfortunately, with these deals, they're not 1 month decisions. It's a decision that is going to impact maybe the next couple years of your life. So it's a very important decision, and it's a decision that should not be taken lightly. So what am I good at, and how can I turn that into money? For example, for me, I like deals, I like sourcing deals, I like looking at them, I like creating the strategic plans. I'm really good with the strategy. I don't necessarily like the operational management day to day. Now, I do have some people on my team that do enjoy doing that much more than, for example, searching for deals. They don't necessarily enjoy that. They like to get their hands dirty, and they like to run businesses rather than kind of structure the deal. Now, that's because also I come from the investment banking space, which is that type of space where you're kind of focusing on deals. You get a deal done, and you go and move on to the next one. So you have to figure that out. Basically what you're good at. Are you good at e-commerce? I'm not good at e-commerce. I don't know anything about e-commerce. I mean, I do actually know quite a bit about it, but I don't have concrete experience in it. So I'm not going to jump into buying e-commerce businesses just yet. And I don't have a strategic partner. I actually do have one, but he's not necessarily willing to get involved at the level that I would want him to get involved. So I'm not going to go and start buying e-commerce businesses. So what is it? Is it e-commerce? Is it AdSense? Is it lead gen, SaaS? What are you good at so that you can figure out what other resources you need? And then you want to think about your network of relationships. That's what I always do. All right. I always think, okay, maybe I'm good at one thing, but which one of my buddies is good at e-commerce? Who has a $4 million per year e-commerce business? Can I strike up a relationship? If I have the deal of the century, do I know how to take advantage of it? Because right now, even if I did have the deal of the century in the e-commerce space, well, maybe I could pick it up fast enough. But what I'm trying to say is that because I don't have that in-house capability, I don't necessarily have that know-how, I might not even be able to take advantage of it unless I learn that and I commit to it 100%. Same thing for SaaS. Is that maybe your expertise? Is content, AdSense your expertise? Do you instead maybe have a lot of time on hand, but you don't have the money? Now, a lot of people think, hey, I can only go into this space of buying and selling businesses if I have the money. That's not necessarily true. Why? Because for most people, actually, in this space, you'll notice it in some of the bigger, the Facebook communities, for example. They're just super busy. They're pulling 80 hours a week, and maybe you just exited out of business. You're getting into this, and you suddenly have the time. That's the resource that you have. And then you find all these other people that have, $100,000, $250,000 laying around, but they just don't have the time to either run the business or to find the deals and get that good deal flow. So that could be something you could use to your advantage. You don't necessarily need to have the money. Do you also have that network of relationships with the broker? So once you kind of create this infrastructure around you, it's very important because it's going to help you with your criteria. If you don't have that infrastructure of relationships, that network in place, it's going to be really hard to figure out what the strategic fit is, because I want to kind of already have everything lined up so that I know when I find that perfect AdSense play, what I'm going to do exactly, and who's going to be, the brokers are going to be coming to me. Let's say if I don't have the money, that's not necessarily the case right now, but let's say I didn't have the money, I would already want to have my investors or people that would be interested in taking part in this deal with me, so that I can kind of network my way through it and put things together strategically. Criteria number 2 that I consider, all right, is what's the level of passive income? Now, I prefer, because, and this is kind of relevant mostly to me just because I'm so busy with all these other projects, what level of passive income does this produce? Like I was saying, I was looking at a fashion site, and I'm currently looking at a few sites in the AdSense content lead gen space. And basically, the cool thing about a lot of these is that they require limited content on a weekly basis, some curation, and that's about it. And they provide stable passive income on a monthly, month-to-month basis, which I find really cool, because then I can take a part in this deal without necessarily jumping into another 40-hour a week full-time job. So when we look at the content AdSense site, the fashion site that I was talking about, it was a $500,000 deal. The content was being published, one article per week, which is once again outsourceable. I already have the company in place that I know that I would funnel that work to, that could publish that content. Social media, same thing, daily posts, pictures, getting some picture content, and getting some images, and then posting them as well. That's also, once again, outsourceable. It could be a repeatable process, and the income, it was consistently growing over the past 10 months. So this fashion case study, it was doing 20 to 30K a month, only 2 partners, 0 employees. It's a very lean deal compared to that site that was doing between 50 and 60K. There was about a team of 10 people full time. Okay. That's very, very different. And they were all pulling 40-hour weeks, compared to one article and just daily posts. It's a very different level of effort. And also, if I acquire it, there's many more moving parts for that directory business that I'm going to have to take care of, figure out in order to grow it, to take it to the next level, versus a content AdSense play. Now, I didn't cover all the risks. I think actually the directory site would be less risky, because for the content AdSense site, the traffic can just drop off a cliff. But I'm not discussing that right now. I'm not talking about that. Of course, everything needs to be considered equally. Criteria number 3, what are the investment returns? And why am I including this here? I do care about returns, but they're not everything. And that's what people always say. You could talk to a lot of people that have been in this space. Another thing, price isn't everything, right? Sometimes it's okay to overpay. It's just not. It's just not. I would rather overpay for a really, really good deal that's stable, that's passive, that's strategic for me, than get the bargain of a century, but it's an unstable deal that's going to require me to work 60 hours a week in order to make it work. So returns aren't everything. Even though that might return me 60, 70% over the next year, it's going to be a nightmare for me. So investment returns come third for me. I would rather have a more stable, more certain investment, and that's returning at the lower range of this, let's say 20 to 50% to 60% range, than having something really, really high. And that is something to consider. And the way I do this is I have a model. So I have a very detailed model, and I'm not going to go into that model right now, but I do a financial analysis on every single deal. Every single deal, it's set up so I can just plug in the parameters. I can plug in the purchase price. I can plug in the seller financing terms. I can plug in if I'm, what type of share I'm going to own versus my co-investors. I can plug in the monthly cash flows. I can plug in all of these parameters, the potential growth rate, and I can immediately see what my return is going to be. Right? So now I can compare things, apples to oranges, so I know what it is. Otherwise, sometimes it's funny because people oftentimes have no idea. They just look at a deal, like, oh, this sounds good, I'm going to buy this. Same thing with a house. People don't look at the actual numbers. They're just like, oh, this is a good house. All right, I'm gonna grab it. but they don't do comparisons. Now, when it comes to returns, also one caveat that I want to mention is they could be a little subjective. And it's funny, right? Because it's a number, but it also depends on the structuring. And what I mean by that is, at the end of the day, what is the only number that matters? The only number that matters is what's the amount of money that I send. Let's say I send $100,000 to get into this investment. And what is the amount of money that I'm going to get back into my pocket? That's the only thing that matters for me. And the reason I say this is because I was kind of arguing with my little group of co-investors, and they were saying, oh, this investment doesn't have the same returns. Guy's overvaluing, and I said, well, it depends how you look at it. What number are you using? Because you could look at net income, but what about when the person has to pay? What about once you subtract taxes from that? Okay, now that's a lower number. And then let's say maybe you're not in the US or something, and you get that dividend paid out. You have another dividend tax rate versus maybe an AdSense content play that you could structure through an offshore company where there are no corporate taxes, and you can reinvest all of those profits without even paying a dividend tax. Okay, so it changes things, and it's important to consider all of these numbers when kind of trying to compare different deals, because some deals that they have to be in a certain location. Even though it's an online business, it still has a physical office maybe in the US, and it might be harder to set up an offshore structure, whereas an AdSense content play, super simple. Setting it up, I don't know, in Panama and Seychelles, wherever you want to set it up, 0% corporate taxes, completely fine, completely legal, as long as you're not doing anything sketchy with that, and you're declaring everything, but you're just optimizing it, just like Google, Amazon, Starbucks, all these companies, they do that, but they're so big that they have teams of lawyers on staff that help them structure this to optimize their taxes and how much they make in profit. So criteria number 4 is stability. And when I talk about stability, I'm talking about this. When we look at traffic and profits, do I see a stable uptrend? Is there a consistent, stable uptrend? Is this a growing investment with 3 things? Growing traffic, or at least stable traffic. Even if it's flat, that's okay. It doesn't have to be an uptrend. Growing traffic, growing profits, and a growing market. Going to potentially Google Trends and looking at that. Or does it look like this? Is it just going off a cliff? And even though the profits are good, they might be high, they might be $30,000 a month. Well, I don't know. What about if by the end of next year, they're $10,000 a month? Or worse yet, and I don't have a graph for this, but 1 month the profits are 30K, the next month they're 2K, the next month they're 15K, the month after that they're 20K. I cannot predict those cash flows by any means, and that's a problem for me. The next criteria for me is potential upside. Can I grow this business by 2x or 3x? Now, for me, and that's personally, some people, they only like these types of businesses. They want to acquire a SaaS business that they can turn into something huge where they're going to have a 10, 20, $30 million exit. For me, I'm not as concerned with that. But I do like to see this potential. I do like to own something that I'm proud of, that I know I can make a difference. I could take it to the next level, and I could push it just really, really far. And that is an important consideration. It's not as important as some of the other aspects for me, like the passive income and making sure that it's a strategic fit. But can I grow this by 2 to 3 times? So now that we talk about criteria and I discussed mine, what I want to show is basically and talk about is my plan for 2016. And so what I basically prepared is these 3 types of plays that I quickly want to cover. And I have a couple of these, and in my opinion, these might not be the right place for everyone, but they are the right place for me. And what I like to share is basically what's working for me. And the first play is the startup play. And these are the 3 plays that I'm going to be somewhat focusing on, one more than the other 2, but the opportunities that I see. And the number 1 is the startup play. There are, and these are far few and in between, that there aren't a lot of them, because there's a lot of SaaS businesses that are being sold that are making maybe 10, 20, 30K, but that are probably not going to grow. They're the same as other SaaS businesses. They have no USP. They have no unique selling proposition. And that's a huge problem because it's a SaaS business. It's something that's going to require maintenance. And there is no reason for these customers necessarily to be loyal. There's nothing unique. And there are a few, though, that do have a unique selling proposition. So the only time that when I'm considering SaaS businesses that it makes sense that this plays a strong play is when I can look at that SaaS business. I can say, okay, this one might not be that passive income play, but if I get the right team around it, or maybe my co-investors, they'll want to get into it, even if I don't, but I'm going to be helping out with some of the internet marketing strategies. I'm going to also get the deal together. I'm going to find the deal, and then I'll help and lead up the exit. Can we together, with our various skill sets, take this and create a 10, 20, 30, $50 million business that one day is going to be acquired, maybe even $100 million business that's going to be exited. And the cool thing is, as a part of my investment team, I have one of my co-investors. He's a good friend of mine as well. He's had 2 Silicon Valley style exits already, has led rounds of funding, venture capital funding that were over $5 million. So he has a lot of experience with this, and he's a perfect guy. Once again, that would make this a strategic fit, because I know if that SaaS business would, for example, need further funding, and it would kind of start not being that cash flow play that I originally wanted. But I really see potential down the road, 2 to 3, 4, 5 years down the road, because the business already obviously has traction. Otherwise, I would have never acquired it. Then I know that this guy is the strategic partner for that business. So that's one of the plays that I'm going to be really looking at. And for that one, though, I can only that's one acquisition. That's not a portfolio of 10 acquisitions. That's one acquisition. And someone needs to lead it up. So it can be multiple acquisitions, but once I make one of my co-investors CEO, or they're heavily involved, well, they're out of the game regarding other plays because of the time commitment required when it comes to these. Play number 2, it's a passive content play. And these are the AdSense content plays that I've been really raving about. They have a higher level of risk because a lot of them depend on Google organic search, and then traffic can drop off a cliff. I was telling you about that fashion site. One of the risks was that one of the posts was getting like 50% of or 40% of the traffic, generating 40% of the income. Well, that post might become irrelevant because the title of it next year, it can come and go. And imagine, 40% of the income just disappearing overnight. That's bad. That's horrible. But it could be mitigated with a high level of expertise, diversifying the portfolio. So not having one content play, having 5, 6, 7 content plays. One goes off the cliff, and another one, can replace that, or others grow in order to make up for that loss by having extraordinary gains. The other thing is we stay away from any plays any businesses that have used black hat SEO tactics. PBNs were very wary of them as well, because Google, when they penalize you, it's usually because of those reasons. So acquiring one, and this is my plan with some of our co-investors, acquiring one or three of them, learning some more in-depth things when it comes to these AdSense content plays. We do have a good solid foundation, but we want to get even more experience under our belts with solidifying all those content writing, backlink, SEO experts, finding those right outsourcing partners. Like I said, I already have a Rolodex, but I want to solidify that and those relationships, putting the proper systems in place, and then just scaling that up. Getting potentially some other people involved in those deals and focusing on it to scale it up to do 5, 6, 7, 10 7-figure acquisitions later on down the road in 2016. So some of these deals, for example, and I'll show you how they look, and these aren't the best examples. The reason why they're not the best examples is because they're on Flippa. And I don't mind Flippa, but I don't necessarily like the Flippa auction place. Some of the deals are good, but there's a lot of junk deals on there, and I feel that I'm wasting my time when I go through it. This is stateuniversity.com. This is one of the deals that's on sale, and it's basically a directory site of universities. There's a lot of, it's had $6.2 million in lifetime revenues. With the financials, they're on a slight downtrend, which is something I don't like. Traffic also slight downtrend. And if you look later on, the financials also a slight downtrend, but they still look pretty good. They're not too bad. They're doing okay. So this is just an example of a content play. Looking deeper into it, that there isn't much new content going up there, and it's something that can be outsourced. Same thing with this. There was an au pair site that's a good example of that as well. So those are a few of these Flippa deals. And then the last play, which is one that I'm mostly kind of staying away from, I kind of wanted to cover it, is in case I'd want to, let's say, jump into e-commerce, or there's something that I don't know, but I want to learn it. Let's say some type of lead gen strategy. And this is a perfect deal. And I know someone else maybe brings it to me, one of my friends, and he says, hey, I need a co-investor. You want to put some of your money down? And I'm thinking, all right, what's in it for me? I don't really care about the return as much as I care about the knowledge. And so I might co-invest with this person in order to see how they handle that play, how they handle that business, and to get and acquire this skill set and be involved. So I would only commit to that if I would be able to have a higher level of involvement, even if I might sacrifice some gains in order for that person to take care of it. Because I'm an active investor. I'm not a passive investor. I like passive income plays, but I'm not a purely passive investor where I'm just going to hand someone over my money and be like, oh, hey, just do whatever you want with it, and I'll see you in a few years. I like to manage things. I like to put things together. I like to be the one making the decisions on the deals. And yes, I don't necessarily like to get into the too much of the operational side of things, but I still like to have a level of control and make the decisions because I believe that I make good decisions most of the time. So the one that I'm really excited about is play number 2, because just of the time commitment. I have so many things on my plate. So being able to acquire a portfolio of sites that won't necessarily require that level of, not necessarily commitment. It always requires a level of commitment, and without commitment, it's just going to go downhill. But without that level of just operationally having to do everything on a consistent basis, compared to, for example, maybe a SaaS deal where the owner is the main developer and he hands over the business to you, and now you best believe that that's going to be very operationally taxing. So that's pretty much my plan for 2016 is focusing on play number 2, maybe doing one play number 1 with a SaaS deal. But if in that case, I'm not going to be the one that's going to be the CEO of that SaaS business. It's going to be another one of my co-investors. And with that being said, I want to do a few more things. I want to talk about basically some homework. And what I recommend right now, because I like to wrap these sessions up with an action item, so that you can continue to work on developing these skills, is writing down your criteria. You heard my 5 criteria points. What I recommend now is writing it down and then going to a site like Flippa.com. Either Flippa.com or something else, and then sifting through some of the deals. Some of the other good sites, I know these brokers personally. QuietLightBrokerage.com is a great one. FEInternational.com is a great one. And you just search their deals. If you want access to these deals, you can get in touch with them. They'll make you sign an NDA. And then seeing which ones match your criteria. For example, Quiet Light Brokerage, they have everything from e-commerce to directory sites. FE International, same thing. And they have very high quality deals, whether they're membership businesses, they are e-commerce, SaaS. They have all types of different deals that get and are pretty interesting. iAcquisitions is an interesting one that I've recently come across, and I still haven't made my complete decision on exactly everything, but I have seen some kind of interesting content deals on there. So with that, I wanna leave this off, and I also want to say that basically, there are 2 other things that we can leave it off with. Before that, just quickly, my investment criteria, just remember it's for consistent gains. Other people have different goals, but this is my investment criteria. And even the co-investment opportunities, that's the only way that I look at them. But primarily, remember, it's content AdSense plays. And the next call that we're going to do, I have a couple interesting ideas. Luckily, there's some time between now and the first week of January, but it's either going to be a case study or it's going to be an interview, maybe with one of the top brokers in this industry. I want to switch it up a little and do some interview sessions as well. Remember, if you're buying or selling a website, go to digistrats.com/buy. Apply to our buyer community, or digistrats.com/sell, and I will hook you up basically with a free valuation if you take your business to me, and I will look at it and I will give you some good strategic help. And if I'm confident that I could find a good buyer for it, then maybe we can figure something out along those lines. So make sure that you mark Mondays, mostly every Monday other than next Monday at 3 p.m. Eastern, because we're going to be doing these podcasts / hangouts every single week, Monday, 3 p.m. Eastern. Thank you for listening, and I can't wait to see you on the next one, where we're most likely going to be interviewing one of the top brokers. I have been in discussions with a couple of them, seeing how they execute these deals, seeing how they execute everything, and what opportunities they see in the market. Enjoy your Christmas, your holidays, and I'll see you after the New Year's.